That's fine.
Yes. I enjoyed the exercise where the facilitator asked us to pitch our businesses, and then unfortunately, sorry, excuse me. Unfortunately, I was in transit, so I couldn't pitch, even though I would have loved to try. But I learned from others who pitched, and because he corrected them on how to actually pitch our business, he gave us the right approach. So we have to project the numbers and then be accurate with our findings, our research. That means if you're pitching your business, you have to say, for instance, now I in the fragrance world. Okay, I can say in the past 7 months, um, the revenue for in the fragrance industry has increased by 50%. Now I have to be precise with the numbers because that's one of the things that the investors will be looking at. They are not just are not just looking at dashing you their money. They are looking at what they can get in return. So you have to show them what they can get in return, and then you also have to sorry, excuse me. You also have to be honest and open, plain, and be simple. Like you have to say it in simple, in the simplest terms. And then he taught us about elevation pitch. It has to be concise yet understandable. And then, if possible, it has to make the person want to hear more about you and your business. So if you have 1 minute to pitch your business, and then you are talking ambiguous terms, and 1 minute passes without you actually saying anything, that means you've not done well in your pitch. And then you have to create an avenue where you say fix an appointment, kind of, or ask the person if you can fix an appointment. Say, for instance, it's like, this is what I do, so if you don't mind, I can meet up with you somewhere to tell you more about what you stand to gain, like something like that. So I that's what I learned on day two.
All right. Thank you very much. So I think we have our facilitator here already. Hi, Beniga. Good evening.
Good evening.
All right, Beniga. Good evening. Nice to have you here. All right. So
Thank you.
just before we kick off, yeah. So from the last meeting, a link was shared, for everyone that participated to apply, so that you can get funding updates. So I'm going to share that link again. Although we had some issues during the weekend, we couldn't. The server was, we had downtime. Yeah. So I believe from tomorrow we would. You can get access to it. But in the meantime, I'm just going to share the link again so that we can all have access to it. And please save it. You can save the link somewhere. Yeah, just in case you need it anytime, or if you need to share with any other person. Yeah, you can do that. Thank you very much. All right. So today's topic is on financial knowledge and intelligence. Yeah. So Mr. Bemiga is just going to share some thoughts. I believe we have an hour, or let me say 45 minutes, or we have 45 minutes you know, for the session, and the next 30 minutes maybe for question and answers. I believe every one of us are going to have questions, So, yeah, so whatever you need, maybe your writing materials, get it ready. Yeah, because we're going to start now. So I'm just going to hand it over to Mr. Bemiga. Mr. Bemiga, it's nice to have you here again. So
Thank you very
over to
much.
you. Over to you. Thank you.
Okay. Good evening, everyone. My name is. I will say I'm standing in for Stephen Edwards. We're supposed to.
Good evening, sir.
Yes, we're supposed to take the class, but he's unavoidably absent. So I standing in for him. And what we'll be talking on this evening is financial knowledge and intelligence. let me see, though the slides are not much, but we'll discuss the slide. So I'll be sharing my slide. Can we see the slide, please?
Yeah.
Let me.
Yes, I can see it.
Okay, you can see the slide. Okay. First, we need to understand what financial intelligence is. That's financial knowledge and intelligence. Though I've displayed it, but what do we get to understand by financial knowledge? Hello. Before we dive into the session, we need to understand, the institution I work for, and of which is making it possible for me to talk this evening. MicroVis Microfinance Bank is a licensed microfinance bank by the Central Bank of Nigeria, offering financial services to individuals and MSMEs. We are situated in Kaduna, and this year is going to be our 10th year of providing financial services to the MSME and individuals. And for the MSME sector, we have loans that we do to them. We have micro loans, mini micro loans, from 100,000 to 300,000, and we have what we call the micro loan from 300 to 500, and we have the SME loan from 500,000 upwards, which we give to MSMEs that fall within this category. And how do you assess a facility with MicroVis? One is having a business, running business for a minimum of 1 year and approaching us. It's not necessary you run an account with us. We request for your statement of accounts from other banks that you run, and we do an analysis of the cash flow and determine how much or what is required for the business. We do it for all categories of MSME loans and individuals. Majorly, it's just for civil servants to, let's say, to just bridge the gap for personal or home needs. And we still have investment where individuals are open or are free to invest with us. Our rates affordable, competitive in the market. Thank you very much. Thank you, Ijoma. So I think, thank you, Ngozi. Thank you, Precious. So now moving to the business of the day. Thank you, Oge. I want someone to, let's say, yes, I've displayed, but I want someone to talk about what he or she understands about finance. Finance. Sorry. So what do we understand by finance? Because I want it interactive.
Good evening, all. Can you hear me? Good evening, everyone.
Good evening. We can hear you. Good evening.
Okay. My name is Oge. I think
Or as an
finance has to do with income and expenditure of a business. Simply put, the financial aspect of a business, which includes income and expenditure.
All right. So I just spoke to Mr. Bemiga. So I think there's a little network issue, but let's just allow him a minute, so he can join in. All right. So you guys can just drop your thoughts on the chat box. Yeah. So the question is, what do you understand about finance? So um, whatever understanding you have, you can put it on the chat bot. Yeah, you can put it on the chat box. So Untibi, I said finance is simply recording financial transactions needed in an organization in order to make strategic decision. All right.
strategic.
I think that sounds good. Yeah. So if you guys have more opinion, yeah, you can share that thoughts on the chat box. Yeah. So
Okay, thank you. I'm back.
all right.
I like that definition someone gave with respect to strategic decision. Because when we look at the topic, we're talking about financial knowledge. Yes, I will say it's good to have the knowledge, but the intelligence, because it must be able to interpret something about a business. And for an investor, first thing he asks forth from, there will be organization to invest in, request for the financial statement. And it is from there we now see, okay, this is how they generate their income. This is how they expense their income. Likewise, and it gives data to take or to make informed decisions. And from a financial statement, what it shows is if there is the leakages in a business, or what consumes more funds in the business. And it now makes the promoter of the business or the will-be investor to make informed decisions. Okay, we need to up our game in this area. I'll need 2 or 3 persons to tell me what business they are into. Maybe I might have to call names randomly. Precious Ishaya, what business do you do? Precious. Okay, from Utibe, process and package food consumables, such as custards and cereals. Now, before I go into the presentation, let us look at consumables, food consumables. Because Utibe, I don't know whether it's a male or a female, talking about custard and cereals.
A female.
A female, okay, sorry. Now, she's into custard and cereals. Now, if we have to look at your business, what do you feel you expend more funds on?
Raw materials.
Raw materials, like
Flour, cornstarch. They'll call it corn flour, cornstarch.
yes, your containers, the branding of your containers, right?
Containers, ingredients for production.
Ingredients
Yes.
for production and the machines. Okay. And what else can you think of?
The packaging, that's stickers, getting stickers.
Okay, fine, packaging. So these are things. So now, what are things is until what do you how do you determine how much you sell? Let's say, is it a kg or gram of custard?
A bucket, yes.
How do you do that?
At the end of production, I will look at how many bags I've produced and how many buckets I've been able to realize from the bag, and I'll check the cost of the raw materials, stickers, the bucket, everything together to know what it cost me to produce the total quantity of what came out.
Okay, so you can now see that is you are now taking informed decisions based on the available data. So, and that is what a financial statement is about, and yes, financial statement, because it talks about income and expense. So your expense now is determining how much you need to generate. So we'll be starting with what financial knowledge and intelligence is. So financial knowledge and intelligence are critical for small business owners as they directly influence the management of business resources. As Otibe has rightly told us, she is into food processing and packaging. So she's taking factors into consideration for the business growth. True or false?
True.
It's
So
true.
it is all what you've heard when you finish processing that determines the cost that you place or the price you place on an item. So influence the management of business resources, growth opportunities, and long-term sustainability. Most of us are out to just make business, to make profit on the now without thinking about the sustainability of a business. Like I tell some persons or that I've met, some entrepreneurs, you don't just look at how much you've made and feel that, yes, I have made this amount, I've made XYZ amount, but rather look at the sustainability of the business, because every business has a season. There's seasonality in business. I'll still be talking with Otibe. If we look at it, what season do you make more sales? Hello, Otibe.
Please, I didn't get that.
I said, what season? Because we're talking about sustainability. What season do you make more sales in a year? When do you make more sales?
Yes, let's say like this Easter coming, Christmas, because in a period like that, everybody will want to send packages to their loved ones. They want to include custard. They want to put items. Some will even want to brand it. So
Okay.
during Easter, we make sales.
Okay. When are your low sales? When do you experience low sales? When do you experience low sales? I think she's trying to control, because there's something I'm trying to get from her about her business. Yes, she said December period. One of the things we look at as a finance house is the seasonality of a business, and we see that from your cash flow. We see that from your cash flow, and we can tell you when is right to dive into your business. She's saying gift packs and whatnot, but during the Harmattan season, that is when she makes more sales, because it's custard, and most persons at that time will want something warm. Am I right, Utibe?
Yes, you are very correct.
It is during the Harmattan season, but during the hot season, sales drop.
Yes.
So now you need to understand. So this will show on your cash flow. And as a financial advisor, you look at all this and you take it into cognizance. And this is what an entrepreneur should be able to know. It is not wise for you to invest more during your low seasons, because you might end up having stale items for those in the production sector, because there's a timeline for it. So for small business owners, financial literacy doesn't just mean understanding how to read financial statements, but also being able to use that knowledge to make strategic decisions that positively impact the business. You need to understand it. Financial literacy doesn't just mean understanding how to read financial statements. Yes, we can interpret, no, I'm making money this period, I'm making money this period. Have you been able to sit down to understand the pattern as it relates to your business? So, because this will help you make strategic decisions. Now, during the heat season, will it be wise for Utibe to just go and recruit more sales agents in order to penetrate the market? People will not want to buy. Somebody who buys probably 2 buckets during the Harmattan season might take long during the heat season to finish 1 bucket, because you can't come back home in the evening and you're taking hot custard and you are sweating. So it helps us as an entrepreneur to make strategic decisions on what to do and when to up your game. During the Harmattan season, okay, more sales. Now I can branch out into new markets. You plan it so that you can make more money. That is what a financial statement, or you having financial knowledge and intelligence, helps. So next is some key areas of financial knowledge and intelligence that small business owners should possess. So, number 1, basic financial literacy. You understand the in and out of your funds? Let me come out that way, because not all of us are financially inclined to some things, but the in and out, the foundational understanding of basic financial concepts, including how money flows in and out of a business. The importance of managing cash flow and how to use financial statements. So first, what you need to understand is the income statement, that is profit and loss statement, which shows business revenues, expenses, and profit over a specific period. 2, balance sheet. The balance sheet is a snapshot at a glance of the business assets, the liabilities, and equity at a given moment in time. Cash flow statement. This tracks the inflow and outflow of cash, indicating the business liquidity and ability to meet obligations. But first, let us talk about the profit and loss statement, because this is what the baseline for every entrepreneur. Ledger system, income and expense. Income and expense. I want to ask, for we entrepreneurs, do we capture everything on our expense line? Do we capture everything on our expense line? The floor is open, let's talk. Expense, as in everything you spend. Because I want to break it down, because I've been able to have an interaction with some entrepreneurs, and there were things we had to really calm down on. So, do we capture everything on our expense line, or we feel we capture all what we expend money on?
No, sir. I don't think. My own side, I don't think.
Okay, Ijoma, what business are you into?
I'm into selling building materials like
Okay,
cement, rods, and the molding of blocks for building.
for building, okay. Okay, you said you don't capture all.
So I don't think
Yeah.
it's possible for everything.
Yes, because I've had a growing entrepreneur that we had interaction with sometimes back. We had to put some things into consideration, and that is what makes you know how much you make on your item. Sometimes we see it as, we're making money, but really we might not be making money, because there are instances as little as our recharge card, it is not well captured. There are instances where an entrepreneur moves just on a business. The cost of fueling or cost of transport is not captured. True or false? And all these things impact on our income. And one of the things entrepreneurs, growing entrepreneurs, fail to do is put themselves on a pay package while running their business. Let me pick someone else. Ngozi, do you pay yourself on your business?
Good evening. Sir.
Do you pay yourself? Good evening.
Okay. After like about few, that was this January, yes. After there was this training I went for, financial literacy, yes, this particular topic. I got to know a whole lot of things, just as you're saying now, I'm just smiling. A whole lot of things about finance that I never knew. So I'm better. I keep getting better, yes. So, yes. Thank you.
Okay, thank you. You see, I like your honesty and sincerity. You weren't doing that before, but now you're doing. Now, as the promoter of the business, now, do we dip our hands in our funds, either to fuel or to solve personal or family needs? Or we do that from what we pay ourselves? Utibe, do you pay yourself? Is it that what you pay yourself takes care of your needs, or you still go into the funds of your business?
Sometimes I'll touch the business fund.
You touch the business fund. So how do you capture it in your ledger? How do you capture it? It is not captured.
Borrowed.
You don't. So we're getting the truth. Under Bali case, you raised your hand.
Yeah, good evening, sir. Good evening, everyone. I think personal funds should be from the one we paid ourselves and not from the business.
And
That's
not from the
for
business.
yes.
Yes, that is what it's supposed to be. But we are now asking ourselves, because I don't want to go into theory. Let us be practical with ourselves. And before we now go ahead on the slides.
Okay.
Yes.
Personally, I do for myself, even though it's not much, and I try to manage that. Like any money I spend is usually from my personal account. So whatever I pay myself is going into my personal account and not my business account.
And not your business account. Okay. That is
Yes.
very, very good. I'll encourage us to be able to separate our business from ourselves. And that is what this session is supposed to guide us through, because we do a whole lot. Yes, we look at it, we are not getting commensurate with what we've put in. However, we should know that the business is an entity of its own. Pay yourself. If you have any other person on your that is working with you, as much as possible, capture it and let it be started, because you will be able to monitor and make decisions. That is the purpose. So I will encourage us to be able to capture our expense. I'm not talking about income, because we will definitely get the income. But our expense line is what shoots, because there are instances where generator, fueling has to be done. You don't have a certain amount, it goes above that. I don't want to talk about putting caps on things, but we need to put caps on items we expend, or that we see that we take out funds from the business to do. And so the income statement shows a profit and loss, because by the time all your inflows shows this amount, all your debits, credits, debits, inflow, outflow, when it's captured, it shows it, and you now know how much you are making. So I encourage each and every one of us, have a business account if you don't have, so that it is capturing. Let us not allow funds. You make a transaction and the funds is now getting into your account before it now goes to another account. No. Create a separate account for your business, because this helps curtail our excesses when it comes to spending. Some of us look at it, I have these funds, let me use it to take care of XYZ need. So we need to put it in check. Next, that we'll be talking about is budgeting and forecasting. Budgeting and forecasting. Budgeting, ability to plan for the future by predicting revenues, costs, and potential profits. If I may ask, for 2024, have we been able to assess our business? How much we generated, how much we expend, and what was our profit at the close of the year? I need 2 persons randomly. Have we been able to do that for our business? Have we been?
Yes.
No. Somebody said no there.
Yes.
Okay, you've been able to assess what you did last year.
Yes.
And from what you've gathered, you feel you're good.
Yes.
So now, what is your 2025 plan? Sorry, I might be barging into you, but let us see. How did you now? What's your budget for 2025?
Is it the amount?
No, you see, yes, probably what do you intend achieving by the end of 2025 is budgeting and planning. You're forecasting.
Okay, like last year being 2025, this is Ijoma.
Yes.
Last year 2024, I mean, we as in check all we did from January to December. That is December 2024. We find out that we are moving forward. Despite all the expenses, we paid workers, the loaders, people that load cement, people that load rods, people that mold the blocks which we use, even the water we use in molding the blocks. After checking all those things, we found out that we are making progress. You understand? And we believe, me in particular, I believe that this year will be better. We am aiming higher, more than what I saw last year, 2024. I believe that this year we will move more and more higher. Thank you.
Okay, thank you very much, Ijoma. I don't know, Rashida Bello. I hope I'm not holding you up too much. You want to say something?
Okay, good evening, everyone. I'm Rashida. Yes, we have accessed our own January to December 2024. And then, although we were able to increase our monthly revenue from 600K to about 3M monthly, but we still made losses after considering depreciation on our vehicle and amortization on all other assets. So, but for this year, we are planning to triple the revenue because we realize that with more revenue, that's how we can break even and make profits.
Fine, thank you. What business are you into, Rashidat?
Okay, we are into home delivery of farm produce.
Home delivery of farm produce, fine. Nice. So now we can now see that one thing about budgeting and forecasting is where are we coming from? Where are we? And where do we intend to be by December 31st, 2025? And also, how do we get there to December 31st, 2025? You've been making 1 million naira as profit. Now I want to make 20 million as profit by December 31st, 2025. Budgeting and forecasting is the way to go because you now look at it, okay, these are the things I need to put in place. You understand? And you now see, what do I need to, do to achieve this? You break down into goals and everything, monthly, quarterly, biannual. You assess yourself. January 2024, January 2025. What is the difference? So that is what, when you now look at what you have done, it now helps you push forward to see how you can achieve better. And in budgeting and forecasting, you now know, okay, this is what I have on ground. this is what I will use what is on ground to get. The resources I need to add in order to achieve. So it's the ability to plan for the future by predicting revenues and cost and potential profit. Budgeting helps business owners allocate resources efficiently, and forecasting helps to prepare for any financial shortfalls or unexpected expenses. Now, forecasting will say, like IJ supplies has been, she receives 100 bags on a monthly basis, and she sells virtually everything at the end of the month. Now she wants to increase her revenue. What does she need to do? She needs to create new markets. And when you're creating markets, it is based on what you've been able to do before. So you are budgeting, and now you are now forecasting. Okay, now I want to be selling to this part of the state, cement. I want to have an inroad. So while you are budgeting, you are already forecasting. And if there's any shortfall, you need to know. That is where I don't, let me just use it. Your goals have to be smart because they have to be measurable. And they help to prepare for any financial shortfalls or unexpected expenses. Because for you to develop, to break into new markets, you need more funds, which is an expense. How do you go about it? What are the things you need? So of which will bring about expenses. And key areas to understand: setting up a budget, create an annual or monthly budget, categorizing income and expenses, including fixed costs, such as rent, salaries, and variable cost, that is materials and utilities, because there's bound to be inflation in the year. So you need to put everything in consideration. Now, forecasting sales and expenses. Estimate future sales and expenditure to anticipate cash flow needs and avoid overspending. One of the things most entrepreneurs do is they don't control their spending. They believe, I want to achieve this. Let me spend this amount, or let me spend at just not targeted. They just want to spend it. Yes, if there's a possibility or there's a chance of you getting a return on investment, but it must be calculated. It must be calculated. And when it's calculated, that means you've taken a very strong decision which does not impede on the growth, on the profit of the organization or the enterprise, and ensure financial stability. If you've made $1 million profit in 2024, in 2025, you want to make 5 million. Ensure that you dot all the I's and cross all the T's in your business engagements, in your networking, which I'll talk about later, so that some decisions you make, the decisions you make will not erode your profits. And scenario planning. Understand how different variables, price hike, loss of a major client, can impact the budget, and take steps to mitigate the risk involved. Next, cash flow management. And this is the ability to monitor and manage the movement of cash in and out of the business. Cash flow is one of the most critical elements for small business survival, as even profitable businesses can fail if cash flow is mismanaged. Now, we need cash flow cycle. The time it takes for cash to come in after spending money on operations. I will go back to Tibe's business. She has sold items or she has delivered items to a wholesaler. The wholesaler has collected the items. There is supposed to be a time frame for your funds to come back. There is supposed to be a time frame. If you give yourself 3 days, ensure that your money comes back within the space of 3 days. Because the time value for money is increasing by the day. What 10,000 can buy on the 1st of February is different from what 10,000 naira can buy on the 25th of February. The time value, so the cash flow cycle needs to be known. When you are supplying or when you are doing, there has to be a time frame because the money has to come back because it has to do some other things in your business. 2, managing receivables and payables. Ensure clients are paying on time and that you manage vendor payment schedules to optimize cash flow. If you leave your funds because you've delivered items or delivered service to your customer and there's an agreement, as an entrepreneur, kindly ensure that the funds come back. If it doesn't come back, the time value for it is there. 2, there is the possibility of funds diversion by the person you provided service or you delivered products to. Ensure that there's close monitoring and short-term financing options. Know when to use credit lines or loans for bridging short-term gaps without compromising liquidity. Like engagements with entrepreneurs, we tell them it is not all the time you need money, even in your business. It is not all the time you need money or anytime you say, this thing. There are things that can be done. You can either try to offset something that is still around you in your business premises well, because the longer those items stays, the more cost you are incurring. And there are instances where you need funds. And as much as possible, don't be too quick to jump at every offer. Your business might just need 500,000 naira. But because there's an offer of 2 million, you jump on it. In such instances, you will be over-indebting yourself. If it's a loan, you will be over-indebting yourself or your business, and you will be struggling to repay back. Now, I want to ask, what has been our experience in obtaining loan and servicing it for our business? I need some persons to talk to it. Anyone? Okay, Rashidat wants to talk.
Okay, I've received a loan from Sterling Bank, a facility from Sterling Bank in the past. And presently, I am working with Bank of Industry. And what I can say about loan is that it is extremely difficult. It is, but it does the same thing with all type of funding anyway. It's difficult to access, and then banks loan, the rates, they are too much for me, for my business, and for the level that we are in. The one that I collected from Sterling Bank eventually proved to be a very big mistake. So right now, I just look for very low interest loans, and that's why I'm working with Bank of Industry now.
Okay, Bank of Industry. So, but what is your repayment structure like? How have you been going above board? Are
With
you
Bank of
under
Industry,
pressure?
with Bank of Industry, it is 9%, and there is a 6 month moratorium.
6 months moratorium. That's fair enough. That's fair enough. Any other person? Any? Precious. Precious, you want to say something?
Sorry.
Okay. So one of the things with cash flow management is to ensure that you manage your funds properly and ensure that the cash flow cycle is watertight, because that is how you can monitor your funds. And I will want to say that for every entrepreneur, as much as possible, every other day at the close of business, you balance your books. And at the end of the week, ensure proper reconciliation is done. Because at times when we leave the reconciliation of our accounts till a later date that is staying too long, we end up losing funds. We end up losing funds. The next slide that I'll be taking, though it is all about ratios, interpreting, if you need to get an accountant, if you're not one, to be able to give the ratios as it concerns your business. Because the financial statements analysis is the ability to read, interpret, analyze financial statements to assess the health of the business, make informed decisions, plan for the future. There's what we call the profitability ratios, such as gross margin, operating margin, and net profit margin. This is to evaluate how efficiently the business is making money. Liquidity ratios, this, like the current ratio and quick ratio, to assess the business ability to meet short-term obligations. This talks about available cash at hand for a business. And leverage ratios, debt to equity and debt ratio help determine how much debt that the business is using to finance its operation. Like those of us that have taken loans, how much of the loan is running your business? How much of the loan is running your business? So Rashida, I'll get back. I want you to talk. How much were you able to assess, and how much of your own equity is in the business as at the time you collected the facility?
Okay, when I collected the facility, I don't even know. I don't have all these books at the time. So, and I didn't pay back from the business. The business ran at a loss, and I had to pay back from my personal pocket. So the loan, I really don't have data for the loan. I just wanted to get the loan off my head and then start all over again.
Okay, so you can now see when we talk about leverage ratios, it now shows, okay, I got a loan of 1 million. What is your own equity in it? Yes, you have the machines, but we're talking about you going to source for the raw materials. Let's use a practical example. She has said her own. Let me use Utibe. I don't know why I'm still talking about Utibe. It's business, the custard business. If she assessed a facility of 1 million, let us know that if she's giving 1 million, let's say for a period of 6 months, she's paying back 1.2 million. So if we have to now look at it, she has injected the funds in the business. How much of our own is she investing in it? Yes, it is good to use OPM, other people's money, to run your business, most especially if you are in the production industry. I will say this, that keep in mind that if you're using other people's money to run your business, you are paying back those people. So your business is just being afloat with other people's money without your own equity, and of which a lot of entrepreneurs fall into that, and they take more than necessary for their business. So these ratios helps to put you in check, to know, like, the profitability, what is your margin on the business, your liquidity, what funds are available for you, leverage ratios, what is your equity in running that business. It comes out from the financial statement. Analyzing the financial statement brings about all these ratios. Next, we have understanding of financing options. Now, this part is something we need to look at. We need to know the various ways to finance business growth, from traditional loans to alternative financing options like crowdfunding or angel investment. Types of business loan, from term loans, lines of credit, or small business loans, understanding the pros and cons of each. No matter how juicy the offer is, I always advise, study what is being offered to you. As much as possible, get someone close to you that can help you explain what you're going into, so that you don't indebt yourself, or your business. alternative financing, non-traditional sources like venture capital, grants, angel investors, especially for small businesses with high growth potential. We need to note alternative sources. There are angel investors around. There are persons that are interested in investing in our business. One of my former bosses will always say that there are 4 F's in trying to get funds. I'll explain that. Let me finish the last one. Equity versus debt finance. Understand the difference between raising capital through selling shares in the business, that's equity, versus borrowing money. What is this talking about? Now, you have 100% shares in the business. Instead of going to borrow, why not allot shares, sell shares in your company or your business to someone, and of which it comes at a discounted rate, and it keeps the business afloat. Yes, I work in the bank, but we still tell people to explore other options in getting funds for their business. I want to pick someone who has not spoken since. Let us understand how they have funded their business. Okay, Utibe asked a question. I mean, how as a growing business, how do you know? Now, if you're getting funds, you know the total assets of the company, the liabilities of the company. You already know as an entrepreneur. Then you need funds. Now, yes, I've gotten the machines. I have a place for my business. However, I still need funding. But if I have to go through the financial institution, it will be weighing down on me. How do you determine the share percentage to give out? I will advise for proper documentation, a chartered accountant or an accountant and a legal advisor needs to come in so that you don't bite more than you can chew, of which it will put yourself or your business in check so that you don't go and give out your business to someone. So I will advise you get someone, a professional accountant, in determining the share to give out, because at times we don't know who we're playing against. To be on the safe side, get professionals to do that for you. Am I clear on that, Utibe? Thank you very much. Because I wouldn't want to say, go ahead and determine it yourself, but rather involve the services of a professional. So next is taxation knowledge. We need to understand our taxes, and of which every entrepreneur needs to know is or a tax obligation, as it is critical for compliance and optimizing taxes. Failure to understand this can result in costly fines or missed opportunities for tax benefits. You need to know your tax structure and deductions, know what tax apply to your business, and what business expenses are deductible, because it varies by industry. Tax filing and payment deadline. Stay on top of filing dates and avoid penalties by setting reminders for tax payments. Tax planning. Explore ways to minimize tax legally, such as contributing to retirement plans or using tax credits for specific investments. These are abound in Nigeria likewise. So we need to understand our tax system in Nigeria and understand the tax system of the state you operate in, so that we will not be paying much more than necessary. That will not be paying much more than necessary. And profitability and cost control. This is ability to make strategic decisions that drive profitability by controlling costs and improving margins. This is crucial for maintaining competitive pricing while keeping operations efficient. So, and what you need to know is the COGS, that is cost of goods sold. Understand the direct cost associated with producing goods or services, and find ways to reduce them without compromising quality. I'll still use the production. We need to look for where we can get our raw materials cheap, where we know that, yes, we can get it at a cheap rate, and of which we will not compromise quality. And if need be for you to even take charge of it, you can in the production of it. But this will help because it impacts on the cost of production. So you need to look at where you can get your items at a very good price, not compromising quality from your suppliers. Variable and fixed cost, know the difference and how to manage both to avoid unnecessary expense during lean periods. I've said it. Understand the seasonality of your business. What are the things that can be varied, the costs that are varying, but what are the fixed things? Fixed, car maintenance, fueling, they are fixed. You already know. Pricing strategy. Set pricing that ensures profitability, but is also competitive. Some of us might want to see, okay, fine, let me reduce the quantity. Just like some persons said, sardine or geisha, they reduce the number of fishes inside them and they're still selling. For me, that's a bad strategy for them. Ensure quality, and if you have to increase price, increase, and if you have to reduce when necessary, try to. There's nothing stopping you from doing promos because it helps your business grow. So understanding the market and cost structures helps determine how much to charge for products or services. So when you understand the market, how do you break into the market? It is pricing. There are some markets that for you to break in, you have to reduce the cost of items. And by the time you get in, you show up your price. And even the sane man will understand that, yes, the cost of this item when it came in was reduced. The quality is still there, and now the price has gone up. We need to still get it. A lot of items are bound in the market with respect to that. Now, risk management. The ability to identify potential financial risk and mitigate them through planning, insurance, and diversification. Know the types of insurance that your business may need. Know the type of insurance that your business may need. If you know you are into productions and it's heavy, that is using big machines, you need to get the right insurance policy, no matter how small, for your business, so that you don't end up paying more at the end of the day. Contingency planning, having an emergency fund, and understanding the importance of saving for unexpected events, economic downturns, supply chain disruptions. Now, like I said, there are seasonality in business, and when you are making more money, ensure you set funds aside, because when the business is low term, then you'll be looking for funds. Like I tell people, some persons invested in the pure water business based on some other person. No, Ade is making money from his pure water. You not delve into it. Ade has been in the business for 5 years. The next thing is, you are now moving into the business because Ade is making profit. Ade understands the seasonality of his business. Ade understands the seasonality of his business. And when you hit the rock bottom for a pure water business during the heat season, or is it the Harmattan season, during the Harmattan, you will not get much patronage. And at that time, 1 or 2 of your machines might be obsolete or might not be working to full capacity. At that time, you now look at it, experiencing some downturns and everything, you start selling. So each business that you are in, understand the seasonality of the business. Either printing, either a bookshop, or sales of writing materials, because for those in the writing materials bookshops, it is when schools are resuming. And now we know schools, now they make sure they buy enough exercise books. You don't find parents buying textbooks in 2nd term, 3rd term. So you need to understand. And diversification. Don't rely on a single customer or product. Spread the risk across different areas of the business. So this diversification is talking about customer and or product. Don't say, I am supplying to Alhaji Folawiyo alone. Look for other persons that you need to be supplying. And for your product, look at businesses you can do that are near what you do. I like Utibe, she said custard and cereals. So you can now see the focus is on the children, little kids, because they are the ones that take cereals and custard the more. So we need to understand that. And lastly, on this slide is financial technology tools. We need to understand fintech tools that will improve on our business. So the use of technology to streamline financial processes, manage budgets, track cash flow, and assess financing options. Many small business owners lack the technical tools to manage their finances effectively. But fintech offers accessible, user-friendly options. So we need to know which to use for our business. There are accounting softwares that we can use for our business to track and monitor. Tools like QuickBooks, Xero, or Wave to automate bookkeeping and generate financial reports. Invoice management using platforms like FreshBooks or Zoho to manage invoices and track payment from clients. Expense tracking, apps like Expensify or Mint that help monitor expenses and manage receipts. Payment solutions, understanding payment platforms such as PayPal, Stripe, or Square for accepting payments efficiently. On this, all businesses, we can key into this. Look at the one that applies. This helps you keep record of your inflow and your outflow. For everything, every supply you make or every transaction you make, ensure that there is an exchange of receipts. You can automate your receipts. You can automate your receipts for every transaction consummated on your channels. This helps in record keeping, and you will be able to track your finance properly. And finally, in conclusion, for small business owners, acquiring financial knowledge and intelligence is not just about number crunching, but understanding how to strategically use financial tools, data, and knowledge to drive business decisions and growth. By mastering key areas such as cash flow management, budgeting, risk management, and using financial technologies, small business owners can improve the sustainability and profitability of their businesses, leading to long-term success. So the takeaway here, improve the sustainability and profitability of a business. Improve the sustainability and profitability of a business. Thank you very much. I believe we're all part of the session and we took our notes. Thank you very much.
Wow. All right. Thank you very much, Demiga. Thank you very much. Okay, so I think we've exceeded our time. We had 1 hour 30 minutes for this, but that's okay. That's fine. So I don't know if anybody has questions, so we can do the questions for maybe 10 minutes so that we can call it a day. Yeah. So Untibe, who else again? I think I will just need 4 persons so that we can round this up. For Untibe, you can go ahead. Thank you.
Okay. Thank you so very much, sir, for that wonderful session. It was really insightful, and I've really learned a lot, and I've taken so much. My question is, as a startup or as a small business that is trying to grow, uh, we always find it very difficult accessing funds. Like you've mentioned, different sources that we can access funds, and I've come to a realization that as a small business, the should I say the available funds that we can access is either maybe that crowdfunding, grants, and the rest of the stuff. Getting money, accessing funds like loans from the banks, microfinance banks is always very, very hard and stressful. Sha, I do not know if when you ask question, I drop in the comment section that I've never taken loan before. Why? I purposefully locked myself out from such funds because there was a time last year someone approached me when I and my team went for marketing in one of the local governments. When the man saw our products, the man loved it. Was like, wow, the packaging, I've never seen custard package like this, so nice, and it will fly, and the rest of the stuff is a distributor. He sells in a very large quantity. And the man was like, do you have capacity? I was like, sir, we have capacity now. He said, okay. He mentioned other of our competitors that he buys so quantity from them, buy in a trucks every 2 weeks, every 3 weeks. They supply us, and in 7 days we make payments. I was like, so is that what you mean? That we are just starting and a growing brand, we will not have that capacity to supply you 2 trucks and you pay us in this period of time. So the man I really wanted to patronize us. At a point, I talked to some friends. They refer me to some microfinance, some banks. I put everything together. I even had to go and register a business from normal business name to limited liability if I will be able to access fund. So one thing I noticed was every financial institution that we approach, they will give us their requirements, their criteria, and the rest of the stuff. And as a business, you're just looking for example, maybe 5 million, 6 million, 10 million, and they're asking you to do this. You bring on the criteria, 10 guarantors, you do that, you need to have this, and they will ask you, you need to have a minimum of 2 million in your account, you need to have this. As in, what I'm driving now is, had it been as a startup, we have such what banks and some financial institution requests, we would have been doing well. So now is, how can we as startup, as small businesses, have access? Crowdfunding, I don't know if there's any crowdfunding that someone will be able to crowdfund 10 million, 15 million, or 5 million that you'll be able to fund your business outside loan. So how can we as small businesses have access to loan to run our business?
Fine. Let me say, accessibility to fund. Microfinance institutions are there to help growing entrepreneurs. First, the business, minimum of 1 year. You need to have the knowledge of that business or be in that business for a minimum of 1 year and maintain proper cash flow records. Next, that the bank or the institution will be looking at is the opportunities involved. Sometimes we ask for too much. As an entrepreneur, it's good. You say, okay, I need 5 million. But the capacity at that time is 1 million. Take the 1 million honorably and grow your business. Because at times we take 5 million, we take more than what our business can take. And we are now indebted. We'll now be running at a loss. And that is why debt to equity ratio what is your own equity in that project that you're doing? I want to start rolling out funds. How much do I have? I tell people, before you approach a bank, know how much you need. Holistically, dissect your business. Ensure you have a minimum of 30% of the amount you're looking for. Imagine I need 1 million for my business. I'll try to mop up cash that will equal 300 to 400,000 and let the bank finance the remaining. What most of we entrepreneurs, we want to unbond, we want to leave everything for the bank to finance. And some financial institutions want to just give you, but they will end up killing the business, because if you collect 1 million, they'll tell you pay within 6 months. That's 1.2 million. Now, Otibe, if you collect this money monthly, how much are you paying back? How much are you paying back? Now you are now paying exorbitantly for it, and you will now be getting angry. So always look for equity. Like what I wanted saying earlier, though, on the side, my former boss will always say, there are 4 F's. And the first F is the family. There is a family member you can pitch yourself to invest in your business. That is the first F. The second F is your friend. There is a friend around you that you can pitch to. Number 3, we were all laughing when he said that. There is a fool around you. Somebody you know that has funds around you. Either your family, either your friend, or your acquaintance. That does not know what to do with funds that you can approach to invest in your business. And you, at that point, the first 2 might not charge anything. This fool now, you are the one saying, okay, give me 1 million. I'll put 1 million in this business. I will give you 1.1 million at the end of 1 year. You make the person see, and the person will, okay, just take this 1 million. I don't have anything doing with it. And the last one is the financial institution, which comes at high rates. So, but in Black Africa, we always want, I don't want my family, I don't want my friends to know this, how I make my money, and I don't want people to know that you've eliminated the first 3 F's, and you now go to the final F, which is a financial institution. And that is when they now tie the nose around it. But rather, look at everything. What are you bringing? You have the machines, yes, you have the materials, but what are you bringing? Equity is what I'm hammering on here. What are you bringing? Don't throw everything on the financial institution. Yes, everything from each financial institution varies. Some is easily accessible. Some they try to safeguard because of their source of funding too. So that is why you see stringent measures. But as much as possible for an entrepreneur, ensure that before you go to seek for 1 million, ensure you have your equity. Thank you very much. Any other person?
All right. So I think we can't take any more questions now as time has gone here. So but I would just like to say a very big thank you, for making yourself available and sharing these insights. Okay, I can see that some people still have questions. So I don't know if you can drop a contact information, maybe like a phone number or
Okay.
or your email address, so that anybody that has more questions, or need more insight, they can reach out to you personally.
Okay.
And yeah. So you can just do that on the chat box, yeah, because we don't have so much time, yeah. So, and also I just want to say a very big thank you to everybody that has made themselves available, to participate in today's session. We have another one coming up on Friday, and we'll be covering public relations, yeah. So more details will be shared via email and on our WhatsApp group, on the conversation that we are going to be having, and also the facilitator. Yeah. So we just want to say a very big thank you to MicroVis. MicroVis has been a very they've been supportive to our initiatives, our program. They were present with us last year for 25 on the 25 award. They came in as the headline sponsor. Thank you to Dr. Kayode.
Thank you.
So I believe that when there are opportunities for SMEs, MicroVis would reach out to us. Yeah, because SME 100 Africa, we are all about empowering entrepreneurs, access to finance, access to market, network, mentorship, and training, capacity development. And this is one of our training. I think this is the first training in 2025. More trainings to come, just like I mentioned earlier, we have IWDC coming up, and what we do for International Women's Day, we do training and we also do funding. Yeah, but the funding process is more of a pitch competition, where women in business, they pitch their business for a particular amount. So we have 1 million naira, we have 500K, and we have, I think, 200K. Yeah. So that is what we'll be doing for this year. Yeah. So we'll share more information on that maybe on the WhatsApp group. Yeah, we'll share more information on the WhatsApp group. So if you're not on the WhatsApp group, I'll try and share the link again. But it is just for women in business, So the criteria, we're also going to share the criteria. Your business must be registered. What else? What else? Well, but all of these details is something we are going to share. Yeah. So we're going to share all of these details. So if you're here to join our WhatsApp group, yeah, because we share opportunities, opportunities that can help your business, if there's any information or if there's any trends, relating to business, we can share it on the group. And it's also an opportunity for you to sell your business. It's another access to market. We have close to maybe 400 people there. You can share your business, your ideas, anything you want to share, business related. Yeah. So thank you very much again, Mr. Beniga. Thank you very much. So
Thank you.
hopefully we'll bring you back again, maybe sometime in the future. Yeah, we'll bring you back again. So, and to everyone again, thank you very much for your time. I mean, it's not easy to, I guess you guys would have been busy from 9 a.m. in the morning to 6, So most times we have to go home and rest, but you just took out time to participate in this training. So it's truly appreciated. Thank you very much. So we'll see you again on Friday. And more information will be shared via mail and our WhatsApp group. Thank you very much and have a beautiful evening. Yeah. So before you go off, we have the contact information, so you can reach out to Mr. Beniga, his phone number and his email. So please make sure you do if you have any questions, any further questions. Yeah. All right. Thank you very much and have a
You're
beautiful
welcome.
night. All right. Bye.
Bye.
Yeah.
Bye.
Bye. Yeah.